The purpose of this video is to identify the primary types of auditors. There are several of them. Some of the primary types of auditors include certified public accounting firms, government accountability office auditors, of course, the internal revenue agents, as well as internal auditors. Certified public accounting firms, and within certified public accounting firms, we have a type of accountant, which is a CPA, which is usually the most known type of accountant, certified public accountant, CPA. And that's what many of us as students should aspire to be. Now, the role of a CPA varies. For instance, a lot of people don't know that CPAs at times get into forensic accounting, also known as investigative accounting or fraud auditing. Forensic accounting digs below accounting records, searching for evidence of criminal conduct. Right, so it deeply represents exactly what auditing is supposed to be, as well as through assurance services. So the assurance services are used because it examines the annual reports of other companies. Exciting niche areas of assurance have increased the demands of these CPAs. So CPAs can work within an accounting firm in order to audit other organizations, or they can work in other organizations that we'll talk about later. Government Accountability Office auditors. As it indicates here, an auditor working for the U.S. Government Accountability Office. Okay. So the financial auditors within that office, they participate in a wide range of engagements with the overall objective of strengthening accountability for the federal government's assets and operations. These type of financial auditors that work for the Government Accountability Office of Auditing, they usually perform financial analysis, they promote financial management best practices, they assess internal controls, and they identify and suggest improvements in a variety of financial areas in order so that the country can be better run. We also have internal revenue agents. Now, internal revenue agents, there's different types of internal revenue agents, and they do different things. Well, the IRS special agents represent the Criminal Investigations Department of the IRS. So if you've been contacted by a special agent from the IRS, it means that the IRS may believe that you have committed a tax crime or are conducting a criminal investigation about you and or your business. The IRS special agents are the individuals who determine whether your case should be referred to criminal prosecution. But also these revenue agents are there just to solidify that these federal tax laws are being complied with. So when you submit your tax return, an auditor or a internal revenue agent, that is their type of auditor, will maybe evaluate your tax return to see if it actually complies with everything that it needs to comply with. We also have an internal auditor. Now, an internal auditor is an employee of a company charged with providing independent and objective evaluations of a company's financial and operational business activities, including its corporate governance. Internal auditors are special agents that usually provide evaluations of operational efficiencies as relating to the last video, and will usually report to the highest levels of management on how to improve the overall structure and practices of the company. Most publicly traded companies have internal auditing teams to ensure that not only compliance to internal structures, but also outside regulatory agencies such as the SEC, the Securities Exchange Commission, and auditing guidelines as laid out by generally accepted accounting principles. Right? So as it indicates here, to maintain independence, the internal auditors often report to these higher teams within the organizations, these higher levels of management. So in short, there are different types of auditors and different types of services and different types of organizations that conduct auditing.